is the DeFi Decoded podcast by 9 Point Partners in cooperation with Prophecy DeFi. The ideas and opinions expressed in this podcast should not be taken as investment advice. Always consult with your financial advisor before investing.
Hello and welcome to another episode of DeFi Decoded. My name is Alex Tapscott and I'm here with co-host Andrew Young. We've completed our series looking at various aspects of the financial industry and the ways in which DeFi is changing them. And now we're on to some pretty exciting interviews. We've spoken to a couple folks already, and today we're very delighted to welcome Jon Lister. Andrew Young, I think this is someone you've been excited to bring on the show, so I'll let you do the big introduction here. Go for it.
Thanks, Alex. Yeah, we're really excited to be joined by Jon today. Jon's the co-founder and president of Satstreet. Satstreet is one of the fastest growing digital asset brokerages in Canada. Jon has executed over $500 million in crypto trades for institutions and high net worth clients, which just gives them completely unique insight into the sort of market flows in crypto. Previously, before that, he co-founded BlockEQ, which was a leading platform for the Stellar network, which was acquired by Coinsquare for $12 million in December 2018. Jon's also spent some time in the traditional financial system, spending time at BMO Capital Markets, Blackhawk Network, and also earned his HBA from Ivey Business School. So on this episode, myself and Alex are going to be asking Jon about his outlook on the macro crypto environment, discuss some of the DeFi trends he's watching, and as well learn more a little bit about how Satstreet works. So with that, Jon, thanks for being on the show. And I guess my first question really is, how do you sort of describe Satstreet and how do you guys go about sort of attracting customers to your business?
Yeah, thank you. Thank you very much for the kind intro, Andrew. So yeah, Satstreet, what we are is a high net worth or institutional brokerage for digital currencies and digital assets. A lot of the times, clients, whether they're high net worth or even institutions, don't really have the time, energy, or expertise with trading large blocks of sometimes very liquid currencies. So it takes a lot of market knowledge and experience to know where you can go to get the best price on these assets being traded, how you can get reliable settlement after your trades. You don't want to have funds being stuck, on an exchange with long withdrawal times. And so we wanted to abstract all the complexity and offer by far the best experience when it comes to either investing in or selling out of digital assets, getting a wire to your bank account same day. So that's what we've built up, and luckily we haven't had to spend any money on marketing. All of our clients have been referred to us, word of mouth. We started off with a small book of clients, and it's just grown from there. So it's an awesome space to be in. And I think it's still very early days, and we have a lot of volume to grow.
That's great. Yeah. So you guys are obviously, you're directly helping sort of both mainstream and more experienced crypto investors. How has DeFi played within sort of your customer base? Obviously, given you're a custodial player, so you can actually directly sort of help your customers, play around and invest in the DeFi space. I would love to learn a little bit more about how sort of how you guys operate in the DeFi space at Satstreet.
Yeah, so it is a challenge because of the regulatory landscape in Canada. So we service Canadian clients, and there are some regulations yet to be defined on the DeFi space. So what we can do is for clients that are looking to get exposure, we can help them buy and invest in these assets directly. We can offer a few different custodial solutions, and depending on the asset, we may have an ability to stake the asset as long as we're not exposing the client to principal risk, like with a smart contract. So, some smart contracts out there haven't been audited or audited from a reliable party. And so if you invest, let's say $100,000 or $250,000 into a token, send it to a smart contract, there's a chance there could be a bug and all of those funds could be swept. So our security team does a very comprehensive review on which protocols are a little bit more reliable, more trusted, where those clients could access with more peace of mind.
Yeah,
John, it's an interesting point that we're making here, which is that high net worth and institutional investors want to get exposure to DeFi. What we've talked about mostly throughout the show is the growth of TVL, of a lot of these different protocols. And it's a lot of like crypto native people who are self-custodying using MetaMask or Phantom if it's on Solana, and they're really deep in the weeds and they're the ones who are doing it. But I think like any market, as this continues to grow, it's going to attract other kinds of market participants. And some of the kinds of participants that you're describing may not be those young crypto native individuals. And so it seems to me like there's a real product market fit for a service like yourself. At the same time, you're an intermediary of sorts, right? So in a way, it's re-intermediating into this new world of DeFi. How do you think of yourself in that respect?
Yeah, so we want to be a great service provider and offer access to as many different parts of the ecosystem as we can, but we also want clients to be protected. Right? We don't want them moving assets into something that we think has a high chance of loss. So part of our process is having these disclaimers in place, educating the client each step of the way. Because in our business, the more assets we have under custody or on the platform, the greater chance that they can turn over and move into different assets. So that's kind of the number one focus is on security. And that's kind of how we make decisions. But by opening up to this ecosystem, yeah, it's generating a ton of interest and demand from a whole range of clients, not just the financial sector. I mean, we have clients from that own fruit and vegetable distributors to appliance manufacturers that are looking at these assets and seeing that they deserve a place on their own balance sheet. So it's really cool seeing this change happen and being able to service them through each step of the way.
Yeah. It's interesting. Just one follow-up on that, which is, are you seeing the fund flows shifting away from Bitcoin and Ether? I'm just not that there's anything wrong with them, but just sort of like these are they're like blue chips at this point, to other more interesting growth opportunities. And before you answer the question, for our listeners, 9 Point Partners is a Bitcoin ETF in the market. Obviously, we have a very, very bullish view of Bitcoin. But when something is worth $1 trillion, it's hard for it to go up 100x in value, right? It becomes as large as the entire global GDP. But that's not true necessarily for startups. But as you've described, startups come with a ton more risk. And I'm just wondering, as this client base that you're describing, as they become more educated, are they looking to migrate into this space more and more?
Yeah, generally, I think it's very common for people coming into this space to think that they missed the boat on Bitcoin and ETH. I mean, I had the exact same thing happen to me back when Bitcoin was at 1,000. I thought I'd missed the boat. So luckily I was able to get a position before it really took off. But yeah, I think that's common. Everyone wants to maximize their returns. And it's true, some of these new currencies that launch have by far the highest, month over month growth. The difficult thing to do is pick the winners, because, you can have a team of engineers from Bangladesh and, all over the world, Singapore, launch a project overnight, and it attracts, tens of millions of dollars in investment. And so because that access to the playing field, it's so open, there's tens of thousands of competitors out there. But if you can really understand, the market and understand how to evaluate the team behind a protocol and what they've done in the past and what the protocol offers differently, then you have an advantage to picking these winners. And there is much more upside potential in them on a relative basis. Being said, I'm still extremely bullish on Bitcoin and ETH because, we're still early on. And so, if for an investor, maybe they're coming in for the first time, I think going into something like just Bitcoin ETH is great. And as they start to learn about the market and they can make these decisions for themselves, they can look at some of these, high potential assets.
Yeah, that's a great insight. I guess one other thing I really, we're talking about all these different kind of new investors into the ecosystem. One of the things that people obviously pay a lot of attention to is sort of where are we right now in the current cycle. So just for context, crypto sort of dumped along with the overall global financial system and bottomed in March 2020. But then since then, it's essentially been going in a straight line upwards, up only as they call it in crypto. Where do you think we are in the current sort of crypto market cycle? Is it still sort of early, or are we closer to the ninth inning? How are you thinking about that?
Yeah, so it's very tough to say short-term movements. I always come with a much more medium to long-term, view. It really is dependent on greater macro factors, right? When it comes to the Fed tapering, trying to control inflation, and what equities are doing in general. So it is a very volatile asset class that can make these dramatic moves, and it's hard to predict in the short term which way it's going to go. But if you're looking at it from a 5 to 10 year horizon, I think it doesn't matter as much trying to perfectly time a dip, or you could average into your investment over time is another great strategy. So if I were to guess though, I still think we have a big we could still move up in this cycle before the next big drawdown.
I think about something like DeFi. We use the TVL metric and the monthly active user metric and a variety of other things. And based on all of those metrics, it's probably one of the fastest growing industries of all time. TVL's up maybe 200x in the last 2 years. That's actually up more than that. I remember doing a chart in September of 2019 of all the top DeFi protocols, and I think the TVL amounted to $500 million. And so today it's 200 billion, right? And then if you look at the user growth, basically from 0 to, it's probably around 3 million per month. But that is pretty small, right? In comparison to basically anything else. Like BlackRock just reported earnings today and also announced that they've surpassed $10 trillion of AUM. That's one company. So 200 billion is a long way from the finish line, in my opinion. Now, if you think that DeFi is just going to be some flash in the pan or some fad or some niche thing, then maybe 200 billion is as big as it gets. But I think what we've tried to make clear on the show is that our view is that this is going to be a lot larger than that, and that the DeFi space could ultimately consume large swaths of the financial industry. So I think that your instinct there is correct, that you don't. We're not here to provide investment advice, but it's all about thinking about things in the long term, and it's all about educating yourself first about what it is you're actually trying to understand, right?
Yeah, I think one thing. That's a great point, Alex. I just want to quickly change tack a little bit. I know, John, you're a big Bitcoin bull, and it sounds like you're also bullish on Ethereum as well. One of the big sort of talking points of the entire crypto industry at the moment is this idea of the flippening, which is when Ethereum would actually surpass Bitcoin in market cap. I'm just kind of curious, is that a sort of thesis or a view that you subscribe to? And I guess how are you sort of advising clients on the risks of Bitcoin being overtaken one day?
So I would not classify myself as like a toxic Bitcoin maximalist where I don't see any value in innovating and this space. But what I do kind of side with is the idea that Bitcoin is going to remain the market leader for the foreseeable future for a few key reasons. One being the most, like the de facto reason crypto exists in the first place is because of decentralization, right? It's introducing a currency that is not easily controlled and manipulated by a small group of people, administrator, company, et cetera, that can arbitrarily change monetary supply or various features of the protocol. And so when you evaluate all these currencies against each other, there's a reason why Bitcoin has that number one spot, is just that total, like, it's by far the most decentralized. So if you think of like nation state actors teaming up to try to crack down, the cost to try to shut down Bitcoin or impact the system would be so great, it's really not economically feasible. And so that's why it's attracted so much investment and capital. And the gap between even Ethereum and Bitcoin is still very large to that extent. We've seen it on our exchange as well, where the ETH network can go down for several hours, nodes going out of sync, exchanges halting deposits or delaying withdrawal requests. So until those core infrastructure problems get, really resolved, and also the ETH issuance rate does, let's say, go deflationary, and you can say for certain that every day there's a lower issuance of ETH versus BTC on a percentage of total coins. I think Bitcoin will remain that market leader, and so I think without anything changing, I think Ethereum will always be a subset of Bitcoin's market cap, and I see a very low chance of a flippening. What I think is very interesting, though, is in spots 2 to 5 or 2 to 10, what protocols are going to solidify themselves in those spots. Is at least how I'm looking at the market.
And what about your clients? I have to think that, a lot of the counterparties that you interact with are used to dealing in the public markets. Are they looking for ways to get exposure to DeFi and crypto in the public markets? And is it a lack of options that are leading them into the assets themselves, or do they see the assets as a more pure play, a way to get exposure?
I think the on-roads into assets like Bitcoin and Ethereum and the custody options available are straightforward enough to give them confidence of buying the asset directly. But when it comes to DeFi, I think I could see a need for, a more trusted investment vehicle, especially when it comes to all the risks associated with DeFi tokens, all the rug pulls and smart contract risks. So I could see there being a big demand for like a trusted DeFi investment vehicle in the public markets.
Andrew, are you aware of any such vehicles in the public markets?
Yeah, well, I mean, great to bring that up. I'm the co-founder and CEO of Layer 2, which is a subsidiary of Prophecy DeFi, which is essentially that trusted DeFi vehicle, trades on the CSC under the ticker PDFI. Alex is actually the chairman of the advisory board. We have some really, really good advisors, including the co-founder of Polygon, co-founder of Bancor, and the co-founder of Tendermint, which is the leading sort of development firm behind Cosmos. So definitely that's something we spend a lot of time on. And I do agree with you. And it sounds like from earlier on our podcast that it's DeFi, participating in DeFi yourself, even through sort of a trusted broker like yourself, still there's a lot of security risk and sort of barriers for people to actually access it directly. And so I do agree with your sort of view that there is a need for a trusted DeFi operator. But yeah, so I think that's great to hear. I guess one other question I had was, obviously there's a lot of regulatory sort of headwinds in the overall crypto market nowadays. You got China re-banning Bitcoin and crypto transactions for, sounds like the 20th time, as well as some sort of turbulence in the US markets. How are these regulatory headwinds something that you navigate your clients through, and how do you guys think of regulatory risk in regards to crypto assets?
So I mean, with China, I mean we've seen China ban Google and Facebook, YouTube. So I think that doesn't really cause for concern on the crypto space in North America, specifically on what China decides to do with regards to their own regulations. I know they want a tighter degree of control with their financial products and services. So, but within North America, I think there is a much clearer path to registration, whether you're on the marketplace side trying to be an exchange for retail, or as an exempt or restricted dealer on the high net worth, the credit investor side. And so, the OSC has great guidelines in place, and a lot of these exchanges have either, recently got through or are working towards approvals. At least in Canada and the US, I'm sure they have a similar kind of framework in place that companies like Coinbase and BlockFi are trying to, work through. I think the biggest concern that these regulators are trying to address is counterparty risk. How are these assets being protected? Because we've seen time and time again where exchanges that aren't properly managed, they have their funds completely swept, right? Whether it's a hack, internal fraud, there's a whole list of reasons where things can go wrong. And so the regulators are really trying to, identify these areas of weakness and how these service providers can, check those boxes, right? How are funds being protected? Who's authorizing, trades, withdrawals, et cetera? How are confirmations done? So any different scenario, whether it's an account takeover, stolen identity, fraud, money laundering risks are appropriately addressed. So, I embrace, well thought out regulation. I think when you try to rush regulation in too quickly that is not crafted in the right way, it can be really damaging. I listened to another podcast recently that spoke to some of the, proposals in the US that is concerning, right? Where, if you try to do direct crypto transactions on a peer-to-peer basis, you may be classified as a money transmitter and you need to collect PII information on an individual level, which makes no sense. No one's going to give their SIN number and do all this, social security number, sharing when you're trying to do peer-to-peer transactions. So I think that those regulations will have to, those proposals, at least they're not regulations yet, will have to get modified if they ever have a chance of even enforcing them. So I think there's still a fight to be had when it comes to, crypto being mature and used, by the masses. So, it's really the largest exchanges and service providers that are raising a lot of capital to help with that regulatory battle.
Yeah, that makes a ton of sense. I think I guess one last question before we let you go, because you brought up a great point about what regulations trying to address, and really it comes down to counterparty risk and security. What are the types of things that new crypto investors should do from a security front to be safe, as well as what are some of the things that you guys do? Because I know you guys have a sort of state-of-the-art security practices. Can you sort of briefly touch on some of the security stuff that new investors should do, as well as what you guys do?
Yeah, absolutely. So, I mean, investors have a wide array of options that they can choose when it comes to custody and how these assets are protected. So one of the most common is they can actually buy a hardware wallet and they can set it up in the comfort of their own home and have a backup in place, stored in a safety deposit box, vault, et cetera. And they can generate their own address and withdraw the assets off an exchange into their own possession. So that's a really cool thing that crypto offers that almost every other financial service doesn't. Mind you, if you want to, trade or move around that assets, it requires a little bit of a learning curve. So to help with that complexity, you can work with Satstreet directly to hold the assets. We've partnered with Coinbase Custody. We've also partnered with Gemini, so investors can do research on both providers and say, oh, I really like Gemini, or I really like Coinbase Custody's offering because it's insured, it's SOC 2 certified. And so we can help create an account for them at these services. and help them manage the balances. And then at the latest, there's a new offering via multi-sig. So the really cool thing about crypto is you can create an address that requires multiple cosigners for a transaction to happen. And this isn't, controlled by one platform where there's administrative access that can undermine it. This is cryptographically enforced by these protocols. So, I mean, the three of us, we could create a multi-sig Bitcoin address where we require 2 of the 3 signatures for the Bitcoin to move. So, either Andrew and I, or Alex and I, or Alex and Andrew, you guys could sign a transaction, but both would have to be present for that to happen. And so we've been speaking with a firm called Unchained Capital that does co-signing as a service. But this can be opened up to any firm that has hardware wallets. They can also offer a co-signing service to be another layer of protection for clients for long-term holdings.
I think, Jon, of yourself as a key bridge to the institutionalization of DeFi and a broader acceptance and adoption of crypto assets. And I think for a lot of market participants, that's a necessary component for them to get involved in this. I think DeFi has a lot of room to run in the user-owned, self-directed world of crypto native people. But I also think that as anyone in the investment business can appreciate, institutions, high net worth individuals, and other kinds of entities are the driving force behind a lot of fund flows and a lot of investing today. So I think that's really important to understand. And I also think that some of the solutions you've described, like multi-sig and these other secure custody solutions, and also smart contract auditing, are all things that are going to be necessary, again, to the wider adoption of the asset class. And I think also, Andrew, to your point, companies like Prophecy DeFi that are creating ways for the public equity investor to get exposure to the asset class also are helping the cause as well. So I think of all of this as being part of a building process to broaden the understanding and the ownership of this asset class. And of course, it all comes down to why. What's the point? The point is because DeFi as a technology offers some really creative and interesting ways to improve upon the way finance works today. To make it more transparent, more efficient, to broaden access, to make it more private, all things I think a lot of people can get behind. So we thank you for your contribution to the industry, and obviously thanks so much for joining us today. It was a great discussion. We'll have to have you back in a year when instead of 500 million, it's 500 billion. Until next time, Jon, Andrew, and everyone who's joined us today, that is DeFi Decoded for this week. We will see you next week. Take care.
The information contained herein does not constitute an offer or solicitation by anyone in the United States or in any other jurisdiction in which such an offer or solicitation is not authorized, or to any person to whom it is unlawful to make such an offer or solicitation. Prospective investors who are not residents in Canada should contact their financial advisor to determine whether securities of the funds may be lawfully sold in their jurisdiction.